All right. Thank you so much, Ben. I'm going to turn off my mic. It's all yours. Have a good time.
Okay, perfect. All right, thanks again to the CBC Dubai and Abu Dhabi for having us. Yeah, we've had a long relationship with both organizations. Like I said, the first time I presented was in Kuwait in 2006, and then Dubai and Abu Dhabi in January 2007, and I've done it every year since. We also do Qatar and some spots in Saudi. So I like to think we have a lot of experience in helping out people living in the region, and then also Canadians coming back. So as mentioned, like my name is Bewick. I'm a partner with Trowbridge. Ernie and I actually started working in Arthur Andersen together in sort of '98, and then joined Trowbridge in 2002/3. So we've been going for sort of close to 18 years. And Ernie actually was working in Australia, and he thought, we really need to come up with a firm that specializes in dealing with helping expats around the world, because there wasn't really firms specializing in that. And I'd been working in the international group in Deloitte, so that's how we kind of started a long time ago. We focus on all sorts of things, tax. We do a lot of Canadian tax for Canadians that move abroad or people that move to Canada. But we also do a lot of U.S. tax. Americans have to file every year, so if you're American, we do that. And then we help companies coming into Canada and then companies leaving Canada as well. So, and Ernie leads up our global mobility group, and he'll be speaking a little bit later. So, all right, next slide, please. So we also have offices in Toronto and Vancouver and in London, Frankfurt, and in Ahmedabad in India, just all servicing all sorts of people all over the world, really. So, and again, a big focus on the UAE. So what I'm going to focus on today is I'll give a little bit of updates on sort of the filing deadline changes and some other things that have happened related to COVID and things we're seeing with residency. Sorry, actually, next slide, if you don't mind. And then we'll really focus on residency, because that's really what's been affecting a lot of people. People have had to make changes that they weren't expecting, whether it's coming back to Canada and not being able to leave, or whether it's moving back permanently, or whether people weren't able to move abroad in the first place. So there's been interesting times, I guess you could say, all around the world, and especially in tax. So I think what happened with the deadline, so originally, as most of you probably know, the Canadian deadline is normally April 30th. It then got extended to June 1st. And I think that kind of shows that at the time, the thinking was that this wasn't going to last that long. It then got extended to September 1st, and now was recently extended to September 30th. So for those, I guess, procrastinators out there, or for those people that haven't been able to file for whatever reason, the deadline is September 30th. So especially if you've moved abroad or you have international tax issues, filing on time is extremely important, because there's some significant and additional penalties. So if anyone again hasn't filed, make sure you file by September 30th, which is the new deadline. Self-employed individuals, their returns are normally due June 15th. Their deadline's been extended till September 30th as well, so there's a bit of extra time. Canadian corporate filing deadlines and trust deadlines have also been extended. If you have Canadian rental properties and R4s, unfortunately haven't been extended, and the payment to the CRA of the rental withholdings is still due the 15th day of the month after that. So on the rental filings, there hasn't been any extensions, but on the personal, there has. So, all right, next slide, please. So there's been a bunch of government incentives, and they seem to be ever changing as well. I'm not going to focus too much on this, because typically to qualify, you actually have to be living in Canada. And as most of you are living in the UAE, or you're in the UAE, you won't qualify. But the biggest one was CERB, that a lot of you probably heard about. That's where people would get $500 a week. It was initially up to 16 weeks, and then they extended it up to 24 weeks. So that ends October 3rd. After that, I believe you're going to go to EI, or there may be some further changes. But again, you must reside in Canada. there hasn't been any clarification, but we're also assuming that you have to be a resident for tax purposes. So if you're just back in Canada short term and not paying taxes, then you wouldn't be eligible. I also just put in a link for anyone who wants to read further or to look into this. Other things, they increase the child tax benefit, or the child tax benefit, to give sort of, more money to people with kids. There's a special goods and service tax credit. There's been some mortgage assistance, and there's been some student benefits. For anyone that's been following Canadian politics, the student benefits has caused a lot of problems to the Liberal government. But there are different programs. Old age security has also been increased a little bit. So there's been different programs where they've been trying to provide assistance to numerous different people in the Canadian society. We'll see what's going to happen. Hopefully things get back to normal soon and we can stop. But that's where we're at now. Okay, next slide, please. Okay, so the payment deadlines, I did actually go over this before. The payment deadlines have also been extended till September 30th. And these are just to give people, I think, a little bit time to, if they've been hard hit by COVID and things like that, to give them a bit more time to get their finances in order, to make payments for personal taxes, including, for people that have to pay in quarterly installments or things like that. Those have been delayed. So the government's trying to give a bit more time for people to make all of these payments. So, okay, next slide again. So what I'm really going to do again is I'm going to focus on the residency for tax purposes, because if you're a resident of Canada for tax purposes, you're taxed on your worldwide income. And as we know, there's no income tax in the UAE. And the Canadian tax rate is quite high. So ideally, it's best to be not a resident of Canada for tax purposes. And so there's sort of two different types of residency for tax purposes. One's if you're a factual resident. And what they're saying there is if you're so if you move to the UAE, but you still have a home in Canada, you still have a spouse in Canada, your children are still in Canada, then Canada's going to say, okay, your family is benefiting from the Canadian tax system. Even if you as the one spouse are abroad, then your family, because they're in Canada, you're taxable on your worldwide income. Now, that's not always the case, but that's typically how it looks like. And these are considered the primary ties to Canada. There's a whole bunch of secondary ties, bank accounts, credit cards, maintaining professional organizations and health coverage that the CRA also looks at to determine whether or not you're a factual resident. So again, if you're a factual resident, taxed on your worldwide income, which includes all your income from the UAE. If you're not a tax resident, then you're only taxed on Canadian income, which is dividends, rental income from Canadian properties, etc. And then so this is what we've been seeing a lot of, and I'm going to talk about a few different cases later, is like what happens if you move back to Canada because of job loss, or if you're in Canada and you can't leave because of COVID. What happens if one spouse left the UAE but the other couldn't because of COVID and things like that. So I'm going to go through a bunch of different cases related to this later. On the next slide, I'm going to talk about the other way you can be a resident. So if you're a factual resident is if you have a lot of ties to Canada. The second is what's called the sojourner rule. So if you spend more than 183 days in Canada in a year, then you're considered a deemed resident of Canada for tax purposes, and you're taxed on your worldwide income for the entire year. And this is where we've been seeing a lot of questions and concerns from clients and individuals related to the fact that they might be stuck in Canada for more than 183 days. So I'll talk about that later. One thing is that comes up a lot is that if you can be seen as a resident of another country under the treaty, you can be a deemed non-resident of Canada. Now, unfortunately, the Canada-UAE tax treaty doesn't really apply, because to get the benefits of the treaty, if you're living in the UAE, you have to be an Emirati. So for people that aren't Emiratis, for Canadians that move to the UAE, they don't actually benefit from the treaty. That's actually in the next slide. You can send that. Sorry, but can you go to that? Yeah, okay, perfect. So this is one of the things where people sometimes misinterpret the Canada-UAE tax treaty and they think, okay, well, I'm a non-resident under the tax treaty, but unfortunately the Canada-UAE tax treaty doesn't apply for a lot of individuals. And that's why you have to, make sure you aren't seen as a resident of Canada, either factually because you have a lot of ties, or because of spending more than 183 days in the year in Canada. So those are the two rules. Okay, next slide, please. Now, I was actually quite impressed because the CRA, at the beginning of this, there was a lot of, I would say kind of a bit of panic from clients and everything that were in Canada because of COVID, because the government was saying, come back to Canada if you need to and spend your time here. And the CRA actually came out with guidance on May 19th, which said, and one of the big things is that said, okay, if you're stuck in Canada because you can't go back to your country because of restrictions of travel or other things like that, the days that you're in Canada from, I think it's March till August now, don't count towards the 183-day rule. So you can actually be in Canada for up to something like 250 days this year. And if you have a bunch of the days are because of COVID, you won't be considered a sojourner and then therefore not taxed on your worldwide income. So I think that's been a good thing that's given people a little bit of relief to know that because they're stuck here or stuck in Canada, they're not going to be taxed on their worldwide income. So count your days in Canada and then exclude any days that are in Canada due to restrictions. So, and then they've also commented on certain factual residency ties. So, if you're here and you had to rent a place for 6 months because you knew you couldn't go back, and then you rented a car and you started doing other things that typically would make people seen as residents of Canada for tax purposes, the CRA has taken a position saying, okay, if your plan is to go back to the UAE once restrictions are lifted, and that was always your plan, during this kind of restriction period, the ties that you accumulated and the time you spent won't count towards your residency status. So again, this was really good for them to come out, and it's given us some options to look at this kind of in a more practical way, saying, okay, you're really in Canada because of COVID. It wasn't your intention, so we can still treat you as a non-resident during this period, even if you have a lot of ties to Canada. So in the next slide, I'm going to talk about a few different things that we've been seeing. And the one is, and this may apply to some of you or to people that was sort of what I talked about the 183 days, where people came in February thinking they would go back in a month or two, and now they're still here, and now they're going to spend the summer here, and it might not be until September or something that they go back. In that instance, they won't be seen as residents of Canada for tax purposes just because they're spending more than 183 days this year. Now, if they're 183 days next year, then they will be residents. But for this year, you're not going to be considered sojourning. What we've also seen is, people that have come back, say in February, and then they expected to go back to Canada or to the UAE as soon as things opened up. Now, things have been delayed, and now there's been a change where they're not going to go back, or potentially they've lost their job. And they're trying to figure out, when does the residency for tax purposes start? Now, typically for individuals coming back to Canada, it's on the day you land and you have the intention of staying in Canada permanently. Now, this, we're looking at it on a case-by-case basis, saying, well, if you came back in February, but you were planning on going back, but something happened, and say you lost your job in July, well, potentially the intention really only changed as of July, and you should only be a resident of Canada for tax purposes as of July. So again, normally the position is when you come back to Canada, but during COVID, because things are so different, we're looking at sort of more practical and like looking at what the actual intention was. So again, if you're in this situation, and it's really case by case basis, sometimes it's actually better to be a resident earlier depending on your income, but it's really a case by case basis and the intention as to when you did actually plan on staying in Canada. Okay, next slide, please. In the next slide, there's an interesting case that we've seen where there was an individual who moved to the UAE, and their spouse was planning on joining them in July. They had, they had given up the rental on their house. They had tried to rent out or tried to enroll their children in school in the UAE, and they've done everything. But unfortunately, because of the restrictions, they couldn't get things done in time, and the spouse and child are going to stay behind for another year for school and things like that. Now, normally, what you would say is that the spouse that moved to the UAE, they're still a resident of Canada for tax purposes until the spouse and the child join them in the UAE. Now, in this instance, we're looking at more practical approaches saying, well, the intention really was for the spouse and child to go. They had done everything, including giving up the house in Canada, enrolling in schools and everything. And then just last minute, they had to get another rental property and continue to keep the child in school in Canada. So even though there may be factual ties, we're sort of looking at the position of saying, well, maybe the one spouse should be a non-resident of Canada for tax purposes, because the real intention was for the whole family to leave. So that's been sort of an interesting thing, and we've been trying to, rely on some of the guidance from the CRA to see. Now, where this gets interesting is you're not really sure how the CRA is going to accept this if it gets challenged, and we don't really have any experience in this because it's such a different situation. But we're going to look to argue that in that situation based on those specific facts. Another situation we had was someone who was only in the UAE for sort of 6 or 8 months, and then they returned to Canada because they lost their job because of this situation. And the question is whether you can treat someone as a non-resident of Canada, even though they're only abroad for a short period of time. And the way we're looking at that is, if the intention when they left Canada was to stay abroad for the indefinite future, the fact that they're only abroad for 6 or 8 months, you can potentially still treat them as a non-resident because of the intention at the time. And this happened before in sort of 2008. We had some individuals that had moved to Dubai, and the economic crisis happened, and they were let go of their jobs, and they couldn't find another job and had to come home. The intention when they left was to stay abroad, and it was just a complete change in circumstances where they had to come back. So we're also looking at situations where people haven't been abroad that long to see if we can still treat them as non-residents for short periods of time. So again, these are really interesting times. I'm sure it's not the most exciting for most people, but the interesting times for us because there's not really and really sort of case law or anything that we can rely on to make these decisions. But we're looking at the facts and trying to be practical and things like that. So. All right, in the next slide. So if you are coming back to Canada, what's going to happen is you're back in the Canadian system, and you're going to need to file an arrival tax return. So, if you come back in June or July, you'll be considered a resident from that date, and then you're taxed on your worldwide income from that date until the end of the year. And so you'd be back in the Canadian tax system, and you'd have to file a tax return as of April 30th of next year, indicating that you're back. And what ends up happening is you're taxed on your worldwide income from the date you get back onwards. So if you do get any bonuses or anything like that, from the UAE and you receive them while you're in Canada, then those would be taxable. If you have rental income from Dubai or any other assets in the world, that income is taxable in Canada from the day you come back to Canada. So it's important to know that. Also, if you leave more than $100,000 of assets abroad, it's important to know that there's a reporting requirement for this. It's a T1135 reporting, and there's a $2,500 penalty up to $2,500 for not reporting these assets and this income. And we see this form missed a lot for people that are coming back. They might not have had this amount of foreign assets when they left, but they accumulated them when they're around and they come back and then they miss this form. So there are additional complexities in the year you come back that it's important to ensure that you take care of. And again, to the extent possible, if you can ensure you get any bonuses or severance payment or anything like that paid out before you come back to Canada so that it's not taxed in Canada, then that's strongly recommended. So, really try to time, if you can, the timing of coming back with ensuring you received all your payments. All right, on the next slide, Ernie is going to talk a little bit about some global mobility implications. And so Ernie, do you want to introduce yourself and take it from there?
Hello, can everyone hear me?
Yeah.
Nice to meet you. Okay, good. You can hear me. Good. So my name is Ernie, or Arun as well. I'm colleagues with Wayne, and the area I specialize in is global mobility issues in terms of employees living and working abroad, as well as employers that send individuals to Canada. Very similar to what Wayne was referring to earlier, there are a number of scenarios we've seen, especially since the COVID started, in terms of how employers are dealing with foreign employees that are working in different locations than they originally planned. So as you can imagine, we've seen a number of scenarios where, let's say, we'll stick with the UAE example. You've got, a UAE company that maybe only has operations in the UAE, but employees are now working from various locations around the world. Maybe they're going to be with family in those locations, or maybe they just feel safer being somewhere different than where their employer is. And so it very much has opened up this whole world of remote working, what sorts of taxation and payroll issues will now arise in those countries. Now, Wayne had referred quite a bit to residency, and that is very much a concept that comes up in global mobility as well. But what I want to cover a little bit about is what happens if you're performing a service in a different country than the home location of your employer, and how could that impact you. So if we just go to the next slide, there's kind of a couple scenarios I want to bring up, two of which have come up recently. So the first example is we had an individual that was working in Canada, living and working in Canada, and he got hired by a new employer abroad. And that employer was going to bring him over on around March 1st, and because of the COVID, the individual ended up having to stay in Canada, working in Canada. So there's two issues we have that we deal with. First is we look at the residency concept that Wayne covered earlier. If the person is still factually living and working in Canada, is he still a resident for tax purposes? And I think the answer presumably would be yes, because he can't be a resident somewhere else. He hasn't had the opportunity to establish ties in the other country. However, in this scenario, because the employer, the foreign employer, and let's assume for a moment that employer is in the UAE, if that foreign employer has now hired the employee, and the employee is going to perform all of their duties while in Canada, that employer now needs to register for Canadian tax withholdings. So they would actually have to set up a business number, even if they didn't formally have an operation in Canada. And they would have to start remitting and withholding payroll for the individual in Canada. So again, very unique scenario in that this company never anticipated that this Canadian employee would work in Canada. They were bringing this Canadian employee over to the UAE, but now they need to register for Canadian withholding. They need to ensure that any federal and provincial tax is remitted and withheld, as well as Social Security, and then make sure that they meet any of the payroll, withholding, and reporting requirements. Now, the CRA has provided guidance in relation to what we call permanent establishment. They have been clear in the sense that if you've got an individual working in Canada that was not intended on being there, the company doesn't have an intention of setting up an operation in Canada, and that would be that would not be considered when we look at the concept of whether the company now has a permanent establishment, and if the company then has to meet corporate filing requirements. So under this example, it's very unlikely that the company would be seen as having a permanent establishment or having a corporate tax reporting consideration given the COVID. So again, this is really just during that period. Now, hypothetically, if the circumstances change, they hire more employees, etc., that can change the facts and circumstances, but under this example, it wouldn't cause the corporation to have to file in Canada. Now, another example that's been coming up is where we've got scenarios where, let's say, non-resident Canadian or a foreign national comes to Canada to perform services during the COVID. So very similar to what Wayne had referred to earlier, we would be able to disregard the days that the individual is in Canada for the 183-day test in determining whether the individual is a tax resident. However, we do have to look at the treaty from where the employee or the person is coming from to determine whether that individual could be seen as taxable for their Canadian source workday. So in an example like the UAE, if you had a Canadian national living abroad and they came to Canada and we were not able to utilize the treaty, then the days that that individual is performing services in Canada, those days would be subject to tax, but not their worldwide income. So we then still have that unique scenario where the employer will likely have to set up a Canadian business number, remit federal and provincial taxes, and ensure that that individual is receiving a T4 for their Canadian source days. Now, we do have other scenarios, and the U.S. is a prime one where we have a treaty with the U.S. If the individual is here performing services, we can then look to the treaty to determine whether those days are can be considered non-taxable. If the company does not have an operation in Canada, we can file waivers to exempt withholding reporting and likely just file a treaty-based return, assuming they meet those tests. So again, it's very important, one, to say, is the employee coming from a treaty-based country? And if they are, then what are the withholding and reporting requirements? Can a waiver be filed? Can the employee be exempt from taxation in Canada? Possibly. If the employee is coming from a non-treaty country, then we have to look at those days in Canada and whether there's going to be any Canadian source income that then needs to be reported. So very important, especially, if any of you are in a scenario where your employer has said you can work anywhere that you feel safe, you still need to take a step back and say, well, hold on a second, is that going to trigger taxation? Maybe not on my worldwide income, but at least on the Canadian source component of my salary, bonus, etc. So something to be aware of. Next slide. I think we covered, just one second. Yeah, I think we covered the mobility items. I'll just let Wayne finish off with this last slide.
I put my video back on. So what we'd like to do is sort of assist everyone before they move to the UAE, and certain people we have been able to. We also do sort of post departure consultations as well. So if you're in a situation where you left Canada and you're not quite sure if you've done things properly or not, and you want to do a checkup, we're definitely happy to have a consultation on that. We also do all sorts of Canadian tax returns for expats. So, we help with the departure tax return to make sure you get out of the Canadian tax system. We also help with planning for coming back to Canada, doing arrival returns, and planning to make sure there's no negative tax implications. We also have a large group that does non-resident rental returns. I think we're one of the only firms that has a really specialty group. So if anyone has a rental property in Canada, we're happy to help with all of those implications. Like the slide says, we like to say we provide peace of mind. We find that people you know, when they're abroad, there's so many different stories and different things they hear from, whether it's, you know, other expats or even accountants that don't specialize in the industry. So, you know, we like to think we can, again, offer peace of mind. So, please feel free to reach out to us. How we work is we do everything in a fixed price environment. So we'll get an idea of your situation, and then we'll provide you with our fees and our quotes before we do any work. So there's never any surprises, and everything's agreed to up in advance.
Thank you, Wayne. Thank you, and that was amazing. There are actually some questions there. Can I chime in with some of the questions, or do you need to go ahead with something else?
No, definitely happy to answer any questions.
Oh, great. So there was a question. Recently, I was made aware that Canadian expats should have filled out a form stating non-residency status for Canadian expats. Unfortunately, I didn't know this back then, and now I've lived and worked out of Canada since 2016. Am I subject to income tax since I didn't fill out this specific form?
So it depends on what form. So there's a form called the NR73, and NR just stands for non-resident, and it's a determination form put out by the CRA. Now, you're actually not required to fill in that form, and we actually recommend never filling it in because you're allowed to determine your own residency, and it's a bit of an antiquated form and there's some trick questions on it. So we recommend never filling out this form unless it's requested by the CRA. And we see a lot of times individuals think they have to fill in this form, they send it to the CRA, and it causes all sorts of problems. So we recommend never filling in this form. Now, what you need to do, though, is you need to make sure you've completed what's called a departure tax return. And that's the tax return that gets you out of the tax system. Because if you don't complete that form, then you are taxed on your worldwide income. And that's sort of a normal tax return. But there's a box on the front page that says, did you enter or leave Canada? And you need to indicate the date you left Canada to have gotten yourself out of the Canadian tax system. So if the person hasn't filed that departure return, then they are still considered to be taxed on their worldwide income. Now, we can also always go back to 2016 and fix things, and we do it all the time. Yeah, the person might want to, you know, just contact us, and we can do a check just to make sure there's nothing to worry about. So.
Fantastic. Yeah, I think that would probably be a good idea because I'm sure it's all on an individual basis. And 2016, are there people that can be taxed even further back, let's say 10 years, 20 years, or how far back can people fix things? That's another one of the questions.
Yeah, so we normally go under, there's a fairness program that allows you to go back 10 years and correct things. So sometimes we'll get people that say, well, I left in 96 and I didn't do anything. Then we'll just say, okay, you know, don't worry about it. It's more than 10 years old. But anytime within 10 years, if you want to go back and correct things under the fairness provisions, that's typically what we would recommend doing. So.
Okay, fair. Yeah. So on that idea, there's actually says that they were talking about a person non-resident. This person left Canada 10 years ago. But started planning to return about 2 years ago. So I got a Canadian number registered with my professional association, Ontario, but I was residing the whole time in the UAE at this time. I am still no tax resident, or excuse my French, did I really screw myself? No health card, no bank account, no property. I think this is a very individual question, but you might want to throw some thoughts in here.
Yeah, no, and I think that's a good sort of point in that, you know, when you are thinking about going back to Canada, you want to make sure you don't get too many ties. You know, like 1 or 2 ties is probably fine, but you don't want to start, you know, getting your driver's license and start getting your health card and doing things too far in advance, because that could, you know, create your residency earlier than when you go back. So in this instance, you know, if there's 1 or 2 ties, it's fine, but we do recommend trying to keep things minimized, not do too many.
That absolutely.
So that person, I mean, is with basic knowledge, again, I don't have all the facts. I would say that person's very likely fine, so.
Oh, good. Good. I like your silver lining, and I'm sure they will like it too.
Yeah.
Just please get in contact with Wayne. He seems to have that silver lining there. There it goes. We have, what happens if I'm a non-resident living in the UAE, but taking an online course with a Canadian college? Are there any tax implications for this?
So we would say no, because that doesn't really show any intention to go back to Canada necessarily, because you're just, trying to improve yourself. You could be someone who's never been in Canada and, be taking this course likely. So we wouldn't say that that's considered a strong enough tie to Canada to make you considered a resident for tax purposes.
Okay, the questions are now popping up like daisies here. What if I move from treaty to non-treaty country? Example, Germany to Saudi. Is there? Okay, go ahead.
So I mean that's actually a good one, because you would likely have become a deemed non-resident from Canada from moving from Canada to Germany under the treaty. You would have been a deemed non-resident under the treaty. And just the fact from going from a treaty country to a non-treaty country, it doesn't change your situation. But you would still want to make sure that you don't have very many ties to Canada. So it is different. Like, we have different conversations for people moving to Germany, because if you're moving to Germany, you can conceivably keep a home in Canada and keep a lot of ties, because a treaty would override domestic rule. Moving to Saudi, you would still be a non-resident, but you still want to make sure your ties are minimized. So.
Okay, so I think the wisest thing is that, again, these are all individual cases, and like many of the people who are asked, how can we get your service? We will be sending a quick follow-up email probably tomorrow morning, which will have all the information how to get a hold of Tilbridge, Wayne, and Arun. So don't worry, we will not leave you high and dry, as they say. We've got another. What are the rules and regulations regarding being a UAE resident? First, then purchasing a property in Canada for the purpose of receiving rental income.
Yeah, so that's good. So if you're a non-resident of Canada and you're living in the UAE and you're purchasing a rental property, we don't see that as a tie to Canada, so that shouldn't affect your residency status. But you will be back in the Canadian tax system, and you'll have to file a tax return in Canada. But on that tax return, you only report your Canadian rental income. So you don't have to include your UAE income or anything like that. It's just the Canadian rental income, because it's Canadian source income, and that's why Canada wants to tax it. There's also various other withholding requirements that you need to follow, because otherwise you can be penalized sort of up to 25% of the gross rent if you don't follow all the procedures. So it is really important to make sure you follow the process properly. But from a residency perspective, it shouldn't impact you negatively. If the person wants to email a lot of summary information that we can send over with all the requirements for people that have rental properties, I'm happy to do that. So.
Oh yeah, that would be lovely. I'm sure there are quite a few, actually myself have rental properties there, but I find that from what you've said to us in the past, I find there's still always a way to mitigate and make sure that you get things cleared up. So, but start with
and I think the key thing is, once you get it started from the beginning and you're doing things properly, it's easier to keep it going that way. So it's always good to get things going.
Go with the flow, as they say. Okay, so a lot of people are asking for your information, even the person saying that they're a newbie here, and this was a single person with no ties and home and renting my home. They want to contact you. Yes, of course, we'll be sending out the information. So I was just speed reading through the question. One person is actually asking, they found that the returns, they're getting their returns slower this year. Have you found that with your clients in Canada at all?
Yeah, that's been really frustrating, especially for anyone with any type of international issue, because the CRA was closed for a while. It took them a while for people to be able to work from home, and even when they did that, they weren't as efficient. I mean, there was whole groups that were closed, and they also took a lot of people from sort of the international group and moved them towards helping out locally with like CERB and different things like that. So, you know, we've seen that all around. It's not something the person should be concerned with. It's just, you know, just unfortunately just the way it is this year.
Yeah, that's what I thought. Again, we have to be patient. I have here, if the only ties I have are a TFSA account and an RRSP account, will that be considered enough ties for tax purposes?
Again, I'll caveat that. If that's all there is, then typically we would say no. And the reason is that these accounts are really meant for your retirement. So, you know, the CRA and the Canadian government doesn't want you all of a sudden to have to liquidate your retirement accounts just because you move abroad. So we would say that no, those aren't enough ties to be considered a resident. It is really important to make sure you don't contribute to these accounts as a non-resident, though, because there can be some significant penalties, but it's fine to keep them and let them grow.
Okay, fair. That's fair enough. I think that's a really good point. They're there. You leave them there. Don't touch them. You can't add, basically, right? So we have about another 4 or 5 questions. Is it all right if I go ahead a little bit, Wayne? Is that possible?
Yeah, no, this, as you probably remember from the presentations, this is typically what happens. It opens up and then there's a bunch of questions. So I'm happy to answer. There's some great questions here, so I'm happy to answer those. So.
Thank you all our panelists. You're getting thank yous written by everyone, and thank you again, CBC Dubai and CBC Abu Dhabi, for always being there to make sure that we get some delightful informative webinars out there. Remember, just like you, if you have companies in Canada too, we also have our offshore membership so that we can have you have some great partners here in the UAE, and we will make sure that your tax needs are covered with these 2 amazing gentlemen. So thanks again. You take good care of yourselves. I'll see you soon. Thank you.
Okay.
Bye-bye. Bye.
Bye.
Bye.